Good day, everyone. Welcome to the trading room. Today is Thursday, August 13. Um, it's a pre-New York session, and we'll start looking for some intraday's ideas. And let's go ahead and look for it. My personal preferences is looking for scalp ideas. I would like to do in this session, like in every session I do, to collect um, 3 to 4 good trades and to net around 30 or 40 pips within a trading session intraday scalps, and let's hunt for some opportunities and see whether we can find some. So in pound, on the pound, we are seeing the price being held down on H1. Price is ranging. Let's see what is the daily tells us. Okay, we see price is struggling through this area, which is pretty much consumed. So once price really penetrates and break this high, it's free to go up. Therefore, the incentive of this flagging is to go up at least to the top of this area. Let's mark it. So within all of this area, we are looking for long opportunities within the intraday. On H1, we see this formation, which is actually flagging. Price is making higher highs, and we expect that this one will continue to go upward. So, and we see that the last formation has 26 pips of range, which might provide us at least 15 to go upward, but then again, it can go much higher. So let's hop to lower time frame and see where we want to go in. Decision area is right around here, and price is flagging down all the way. We can have around this area. I'll have a buy limit. Let's make it a little bit higher. 0.10, 1 pip per $1 per pip. That would be our, and let's take it from this decision point right here, buy limit, and let's set a stop loss downwards. And then drag it. So we're actually, and let's set TP, and we'll work out the values right off. TP. Now everything will be drag and drop. Okay, so TP will be about 15 pips. I don't want more, just want to take whatever I want in my pocket, regardless of what the market potentially provides, because I rely on the steady allowance of pips. So my TP will be 15 pips, while my stop loss will be 40. Around 40. So it's going to be 36 pips in this case because of all these price action formation. There's so many fresh demands that actually protect what we're doing here and here. So 36 pips, that would be our protection. So this is the cable trade buy limit at the decision point level. I presume price will go much higher, but with this, we're pretty much safely going to get what we expect from the market, because within that descending flag, we are within the channel. So we're pretty sure that even if we get our trade executed, it's probably will go and take the limit, even if it's continued to flag for lower entry levels. So we're good to go. Let's leave it like this and see if we can get executed later on. Let's continue scanning Euro Yen, Euro US dollar. Euro US dollar is on H1. We see these levels. Let's see what's going on the daily. On the daily, we have a very, very strong up bias, which is now reacting to a mid-term flagging supply. So probably the reaction is that formation and price with this very strong incentive may go up. You can see that the price reaction very, very strongly. It was pretty much taking the whole zone here that is compressed, and like I used to preach everyone, this is compression. There's no supply, all this area, and therefore price is just free to slide up. So going back to H1, we see that price is attempting to break high. It's flagging now. It's made a higher high. It's rely on demand, suspended on more demand, and then go to that lower demand and and taking that upwards. For the intraday, we can just take a very tight action, which is this flagging is about 25 pips. We want 15. Price had broken that flag, so target will be here. So we have enough action to take this on the intraday. Let's see where we can time. I think we've missed it. The trade should have been taken right here at 118.28. Let's see, we're 6 pips away. And what about the range? We have 15 pips range to take this. So let's just buy it and mark it and have 15 pips upward. That's 15 pips up and have a 40 pips. We have up to 45 pips to risk here while going -3-to-1 ratio. So yeah, we could buy lower 1 pip. Doesn't really matter. So that flagging went all the way down to this decision. It can go, it's now going to go up. We might have a tiny bump here, and So maybe our TP should go lower, but we can do that. We really have to stick to our plan and take 15 because the whole portfolio strategy is built on the negative 3-to-1 ratio. So we always want to take 15. But then again, if price go all the way up here, it will probably bounce for a while and then it will break or attempt to break. So that will get us to the TP probably. And so let's say that if price go here, and let's mark it, if price bounce here for a longer while, we'll maybe shift our stop loss a little bit higher and above break even and just lock the risk free. It depends. So let's also put an alert so we'll hear it. Where's the alert? Make a sound when bid is higher than 118.48. That's right about here. Let's move it. So if price go here, we'll know to go back to EURUSD to hear it. Bid should be higher than this. Okay, we're good. All right, next. OZN, OZN. I have this pair. We see this formation created on top of these highs. So price is suspending high, flagging, which was a brilliant opportunity a few hours back to just slide through this, ranging around 20 pips, 30 pips range. So that's good. We cannot take anything here. But let's see what it tells us on the bigger picture. The bigger picture here is false breakout, twice breaking these tops. It's obviously going up. However, I don't want to buy, at least not at these high ranges at this time, although it looks like it's ready to break out and go for the next levels toward this target ups. Toward this level. The breakout is right about to happen, and I believe it will, but risk management wise, it's not a trade I can take because of the compression happening below. This spike is all built of compression. There's no demand here. If something goes wrong, price can be sliding through all this compressed area and actually take you into a very deep drawdown before it goes up. So it's free, and I believe that this is a good accumulation to break through. But in terms of risk, it's not a good trade to take. It might work, and I think it worked, but my risk policy won't allow me to take this. So we'll wait and see. Anyway, if you know what, let's just leave an alert here for bid minus, for bid bigger. Bigger than 76.85.6. And if price will get there, we'll hear a beep and we'll go and see how the reaction looks like. Where's that alert? Oh, it's the OZN. OZN, where are you? Right here. Okay, so if price goes a little bit there, right? So once price goes there, I want to hear the beep and just take another look at the reaction. What's going on? And then we'll go to lower time frame like M1 or M5 and look for a Quasimodo confirmation to go down. Maybe we can go down and just take advantage of these no demand zone if the reaction will be again toward the lower lows, because in these cases a lot of deep pocket players like hedge banks, and they would use this area as an opportunity to, by knowing that price should go up, we can see all evidence that it goes up. They can say, okay, so many other people with straightforward mind would go up here. Let's sell our position, push price down, and get it in even cheaper place. And we have all this compressed price will go there, and then from here we can fastly go up. That can be an attitude that um, um, higher profile traders can go, and that can definitely happen. It's not the logic of the value of the commodity, but it is the logic of being a player in the market to um, mislead your opponents in the market to buy at cheaper price. So that could be a manipulation played out. But the true incentive of this is to go up, and we definitely see it. So anything can happen. This is why risk-wise, I would not buy, or low, especially I would not buy a breakout here against a no demand zone. That's a real no-no. Let's continue and hear the bip if something happened. Let's see what's going on with our trade, pound trade. Okay, so our dollar, our euro dollar went a little bit up 6 points, and now it's sliding down. I don't worry no more. I see price is pushing up. It's very reasonable bounce back. I'm really feeling good about that bounce back being blocked by this area. If it would go and penetrate this compressed flag, I would be worried for a little. Remember that we do have our stop very far back and safe, so there are more room for price to try to sieve us into lower places. But I do believe that this level will hold, hopefully, and continue. It's looked like it is, but you can never know. It's the market. So we'll wait a little more, right? We'll hear the beep and shift our stop loss beyond break even, lock the risk-free trade once we hear that beep, and hopefully taking RTP. Let's see. Okay, let's continue. I hope it's going to happen within this session. Euro yen, euro pound, sorry. We do have something hiding here, some kind of a trade with a TP from below. Oh yeah, it's a buy limit we've set up long ago on these demand levels. It's pretty. I think it still makes sense. So I would not touch it. It's a fresh demand, untouched, and very, very strong reaction up. We see prices compressed here, and although it's pushing upwards, I think versus the no supply here on the H1, it could definitely give us a scalp of 15 pips. So just leave it there and see what's going, how it's going to evolve. Let's see if there's no stop loss here. That's a very wrong thing to have. So let's take care of that. Try to push it a little bit lower, and so we can just take it, give it like, okay, we have 40, so let's leave it tight, about 20 pips stop loss. If it goes all the way through this zone, then I don't want to take this trade and hustle with a very, very long and tedious drawdown. Let's cut it very, very fast. But let's see what's happening up here. Oh, we see that our euro pound is doing something. It's starting to signal green, so it means like we're 10 pips before TP. Let's see if it's pushing up. We can be happy taking these 15 pips together. Okay, let's continue euro pound. Sorry, I don't know why I mix this. Okay, so price is flagging. This is the type of trade I like to take on a flagging. I think that would be cool to scalp just this flag being supported by this very, very fast upward moves. So let's see what's going on here. Where is it? Where are we at this level? Supported by this one. It's been touched. I think we can look up on 1 minute or even tick chart. We can take the euro pound. Where are you? Euro pound. Let's look at a tick chart and see if we can see a Quasimodo formation on a tick chart and use it as a confirmation to just time ourselves in, because it still doesn't show it's bouncing up, but once it will, these all compressed area is a very cool place to take our 15 pip scalp. Let's see. Okay, so it's still being pushed pretty much by the law of supply and demand pushing down. So I wouldn't buy it yet because we don't see any signs of that a reversal is happening. What I would like to see is price actually creating a micro demand here on the M1, and then maybe trying to attempt or to bounce at the highs of this flag up. If it will, then once price going back to the region, we can buy this compression. But still, there's no confirmation, not on M1, not even on tick chart. So it's not really ready to take there. Euro dollar is still undecided. Let's go back. Okay, something is happening. I think it's ready to start drilling up. Come on, break something up. If price would go to these areas and bounce back down, I know that it signals to go up. It's a flag. The flag should be completed, right? It's a flag in a context of going up. Maybe it's flagging all the way here. Yeah, it's still a risky thing, but we do have a very delicious compression here to take a scalp. Euro US dollar is climbing up. I think they're pretty much correlated. It's still the euro as the base currency that is being pushing up. Maybe it's the hour. We're like 9 minutes after the ringing bell in New York, so maybe things start to take a direction very soon. Let's see here. Let's go back. That's M5. M1 is starting to accumulating some buys. How much pips here? Like 13. It's not the optimal range that I would like to take here. It's like 16 for the whole thing, for the whole we're here. It's like 19 for this whole messed up place. So I don't know if this is enough range for me to take 15, but it's really tempting. But we're not about tempting. We're trying to reason with our trade. So maybe we should leave it and just let go without us just knowing that we were right. That will make us happy without taking that trade, because it's not in place with our profile. So back to Euro US dollar, things are starting to baked up. Okay, we're flagging up. It's not that fun to see, but there's no demand here. So let's see if we'll get a spike up and get this 15 pips of ours and go home. Let's see how will be the reaction on that supply. It's going to react, give some reaction. Hopefully, very fast it will go and take us. And I think we're good to ride on something that is happening back in the exchange. We see some energy accumulating in. See how it responds. M1 for that supply right on the pip. Just amazing, this supply and demand concept. It's you just see everything right on the pip. It's so accurate, but it's just a reaction, right? Because we need to go with the context, and the context is, at least on the low time frame, and the trade that we're taking is to go up, is to take all that no supply zone, right? So we're pushing up, and the micro moves will give us the reaction. Price is never a linear way to go. It's always bouncing, and these bounces, they happen for a reason because of micro orders being there. So let's see if we'll have few M1 candles held up by this upward, then we can shift our risk-free trade. We're about seven pips win. Let's see if this holds. It should. Okay, it was held by here, by this demand, this injected after the false sell breakout. It was really pushed up. So next station is to actually break these highs, because this one had consumed these supply, which had two attempts to break past historical level, the third time here. So on the fourth, it's just it just predicted to go upward, and we can see on H1 price is really ready to. Okay, we got the ring to push our risk-free trade. Let's just push it, get back to M1. Okay, now go and take our profit so we can go home happy. Okay, so it's broken that. It can bounce more, but we can see a very steady hold of the demand here. Our TP is right in the range. We are risk-free by now. Let's look at the ticks of the euro dollar. See how price is being pushed. Okay, it's a lift off. Okay, we don't need this alert anymore. We are very likely to take our 15 pips for the session. It's like 3 to 4 pips to go. And we're have it. We don't want to take more than we plan to take. So 15 pips is what our allowance. And although the market can give much more, and probably will, we are going to take only what we decided to take. This is our solid decision. We have to stick to it, because this determines everything in terms of our overall portfolio performance. So we see price continue to respect demand, continue to push upwards, not breaking demands, lower lows, and we're very nearby accomplishing our scalp. I want my 15 pips, not more and not less. So we got it. We got it, and there's a lift off. We could get much more. We should be happy with that, right? We could have much more, but let's keep it. I don't care where the market goes once the trade is off. Once I got my 15 pips, I'm happy. Okay. It will go 10 times higher. I'm happy. Okay, guys. So that was, we took together one trade, 15 pips with pockets, almost zero drawdown. And um, I'm happy that we had the chance to take it together in the session. It's not always going to be like this, but before we wrap, let's see if we should take some the pounds. If we should stick to it, I think we should just cancel this order, because if price after breaking this level is going back here, I'm not sure it's going to work anymore, because now price action conditions are totally different. So let's just delete this trade, and for next session we'll look up for better ideas. You know what? No, that's we're going to have some bounce here. I don't know for how long, but yeah, we should be happy with our 15 pips. So remember, our trading room is open every Monday to Thursday, 30 minutes before ringing bell on New York. So that's 8 a.m. EDT Eastern Time Zone. It's a trading zone. It's a trading room made by the guys who are trading here at the location of the 5%ers, and you're invited every day to come and join us and see the activity and how we trade. There's Sneer with many years in trading. There's Saul, 8 years in trading, professional scalper, and myself. Every day we switch, we talk, we discuss our ideas, and we trade together. And we invite you also to participate. If you have a trading idea, if you want to show your screen, if you want to show your way in trading, you're very welcome. Just talk to us first, and we'll make sure that you can present this to the community. So remember, every Monday to Thursday, 8 a.m. EDT, we're here to share our trading with you guys. So thank you for showing up today. The recording will be posted later on for more views if you want. We'll see you Monday. Have a great weekend, and we're happy with our 15 pips for now. We'll continue without broadcasting because we want to take another 1 or 2 15 pips trades. There are more opportunities in the intradays like this. Okay, guys, take care and see you Monday.